Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong structure level. In fact, this zone was acting as previous monthly resistance here, which the market then broke to the upside, and that previous resistance was turned support here and again support here. And as the market is testing the level and rejecting it to the upside, we could expect more potential bullish continuation away from the zone. Now, if we look at the pattern, we have already identified a clear impulse and correction, but if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of this impulse leg. And what we can notice is that the level that the market actually tested and rejected here is exactly the zone in between the 0.618 and 0.786 Fibonacci retracements. So this was actually a confluence of support area because we had both the Fibonacci levels and the structure. Dropping down on the weekly time frame, what do we have? Now, from a weekly standpoint, we can notice how the market has now broken back above previous weekly resistance, from which we can see these multiple rejections to the downside were created, which the market has now broken to the upside and is currently retesting here as support. Now, as the market is testing previous weekly resistance turn support and rejecting it to the upside, we could expect more potential bullish continuation away from this area. Going down on the daily time frame, what do we see? Now, from a daily standpoint, price action is quite clear. Now, I did speak about USDCAD a couple of times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this move higher. Then we had the creation of this W and explained all the reasons for which we could expect this correction. Then from here, I made another breakdown explaining all the reasons for which we could expect this rejection higher. And again, that is exactly what the market is currently giving us. And by the way, I will link in the description all those previous analysis, so you can go and check them out for more free education. Now, as the market is breaking above structure, what we need to identify is that now we have a new level of previous daily resistance, which was resistance here and again here, which is now getting broken to the upside. Now, if the market will be successful in breaking this level to the upside, what we could expect after that is a potential retest of that previous resistance turn support. And on the retest, that is where we could expect more potential institutional longing, which at that point would further increase the probabilities of a potential move higher. In fact, if we go and see what we have when it comes to the commitment of traders, so the COD data, which is essentially what institutions, so hedge funds and the biggest players in the market are doing precisely on the CAD, what we can see is that with the last reports, we went from having a positive net positioning of plus 6.3k net positions with more longs than shorts. In fact, we had 36.2k longs compared to only 29.9k shorts, all the way down to now having a negative net positioning of minus 48.5k net positions, with a situation in which clearly we have institutions moving to the bearish side of the CAD. And institutions moving to the bearish side of the CAD means that actually they are longing USDCAD, because always keep in mind that all currencies on the spot are traded against the USD. So if you're checking in data for the CAD, you're actually checking CAD USD. So if institutions are shorting CAD USD, it means that they are longing USD CAD. So moving back to the technical side of this market, if we will have the successful break above this confluence of resistance, which at this point will become confluence of support on the retest. This is the area inside of which we have good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of this potential move higher. So on the retest of this level, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. If you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount for the upfront price of the program, which is from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that at the moment there is still a bit of time to join before the offer expires and everything goes back to normal. So I really suggest that you go and check it out as soon as possible. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.